People have loved in the past on the claw when we've done this thing where we talk about history. So not just, the last couple of months, which people can remember, but the idea that, of course, capital markets have a long process of evolution. South Africa's financial services sector didn't get to be the size it is now, 20% of our gross domestic product overnight. So I want to ask you to have this little discussion with me. I've got a question or two. I know you've got a few.
Right.
I'm going to kick it off by asking you the most simple question of all, and that is, when did the South African stock market, the Johannesburg Stock Exchange, kick off? And, what was the character of the market back in those days?
Well, those days, going before my time even, it was a mining market. It was a mining village.
We're talking about the late 1880s, right?
And then there was between the chains where they actually traded on the street.
Where was that? Was that downtown Joburg?
In Johannesburg CBD.
And between the chains was like a street side somewhere?
Across the road. And between there was the place of activity and trading in shares.
Fantastic.
No governance, wonderful, anything went. And subsequently, of course, they got permanent quarters. They were in always in the CBD.
Yes.
They moved from Diagonal Street.
Correct.
Interestingly enough, that's been bought by an individual now, a dentist. So
yes.
Their premises can be used for all sorts of purposes. Prior to that, they were in Hollard Street.
I remember that.
And the building was called Eagle Star House. Do you know why?
Okay, no.
Well, because the stock exchange was going through a very tough time, had this property, started a development, then came a bear market, thought, oh, we can't afford to fill this building on our own. They didn't look ahead. That was the problem. And so they went into partnership with Eagle Star Insurance.
Oh, I see. So Eagle Star then occupied some of the business premises. Yes. And when was that? Sort of in the 1940s, 1950s?
No, 60s into the 70s. Then they moved to Diagonal Street.
Which was a purpose-designed building with the floor down at the bottom, open outcry floor.
That's right. Yes.
And then the market then evolved, I think it was 95, 96 when they went electronic?
That's right, yes, that's quite correct. And then that was the end of the open outcry. It was the end of an era. A new breed of traders came into the market, but the market could handle much bigger volumes, and we needed that if we wanted to join into the global arena in trading.
Yes. I remember people were very disheartened that had grown up on the floor with the drama and the excitement of rushing on there and, dealing and people being able to manipulate the market in certain shares. People would spend half the day in the red room getting drunk, totter out at 3 in the afternoon to do a few deals. I mean, everything was tended to change when we went electronic, but actually we had a massive increase in liquidity and traded volume.
Absolutely. And we were able then to trade instantaneously with London. And remember, nowadays, there's so many of our stocks are dual listed or even more.
Yes.
Stocks are made in London, prices are made in London, and prices are taking in Joburg because there's more trade there than here in our major shares.
So you mean a stock like Billiton or S.A. Miller would trade principally in London, and the price discovery mostly happens there?
That's right.
And then the market price in Joburg is a function of the currency and that price, and a little bit of to and fro either way.
That's right, and the currency change, yes.
In fact, that leads me to another question, and that is the character of the listings. You said earlier that the Johannesburg Stock Exchange started out as a place where people traded entitlements in mining companies, gold mining interests. But obviously over the years that's changed significantly to the point now where we have a plethora of different listings, different sectors, and these dual listed companies.
Yes, that's quite correct. The accent has gone right away from mining, as has the accent on the overall economy. After all, mining is only 10% of the economy, and you just mentioned the financial sector is over 20%. So it has slipped back quite a lot from the earlier days when it was over half the economy.
Yeah, but that's obviously a positive thing because it presents investors then with choices, diversification by sector. And I mean, the process is not entirely complete. One might argue that in certain areas like, say, healthcare and technology, relative to global markets, we have rather few listings. Say in mining and resources we have quite a lot, and financials perhaps we've got quite a lot.
Sure. Well, that is because we don't have enough international companies listed on our exchange. After all, we can't afford to set up too many pharmaceutical companies based in South Africa.
Yes, yes. I suppose getting foreigners to list here, though, is a bit of a long shot. I mean, normally companies only want to be listed in an environment if they have a business there and are trying to attract an investment audience there. But I guess it's a process.
Yes, indeed.
Exchange control also doesn't help that much because it does complicate matters in terms of the flow of funds backwards and forth.
Although that has been largely lifted now. So for companies, it's easy to transfer funds from one geographic area to another.
True. Okay, Ian, have you got a question for me?
Yes, I have. You know, we're talking about equities all the time, but in
Right.
our financial markets, you know, an even bigger sector is the bond market.
Indeed.
And what is that? That's the raising of long-term capital, primarily. The government has to do it, companies have to do, everybody does. And what is interesting is to see foreign interest in our market now. And there's more foreign demand for our bonds than our equities. And quite interesting, because of the generous yields that we have, the yield differential between the US, where it may be between 0 and 2%,
right.
and South Africa, where it can be 7 or 8%, is such that, having seen us with a relatively stable economy, stood up well to the recession,
right.
have had a strong currency recently, the gains that they have had have been significant. And these inflows can be up to 50, 60 billion a year, which is considerable.
Okay, so
a month.
Asking me what the background is there. I mean, being an equities guy, I'm a bit vague on the details, but I can think there must have been sort of 4 parts to it, because, you know, there's government treasuries, which must have been in existence for a long time. Yes. Then there's corporate borrowing in the bond market. Then I can think there's sort of municipalities, and then the last kind would be municipalities and parastatals, Eskom, Transnet, and then lately these sort of securitized vehicles where, you know, asset-backed finance and so on, all of which is traded on the bond market, and now that's part of the JSE. But give me the history on that. I mean, when did the bond market come into existence? Which parts of those 4 things started trading earlier and so on?
Government bonds.
Okay.
They were the biggest part of it. And they always traded, they only really started to trade in a competitive way from the middle 1970s.
Oh, really? Okay.
And that was when...
As late as that?
Yes. When they switched from dealing on a price basis, the way the UK does it, for instance,
right.
to dealing on a yield basis. So you knew exactly what the return was when you were quoted. You could buy this bond at that
So prior to that, it had really just been government dealing with institutions and placing the bonds in sort of auctions, and then nobody ever traded them much?
Primarily, yes. It was a put in the bottom drawer and leave it there sort of market.
Yes.
Now they're actively traded. If there's a chance that interest rates are going to go up, the interest rate cycle is changing, according to the outlook of fund managers, they will then be buyers or sellers or changing the maturity. If the risk is high, they will take short-dated maturities. If inflation risk is low, they will then venture into the long
So now we have a whole army of people in financial institutions whose job it is to try and guess where things are going in terms of the interest rate cycle, but also to pass opinion on the credit quality of, say, you know, some package of credit card debt wrapped up by First National Bank, right through to a new issue from Transnet or from Eskom or whatever.
As a financial analyst, I'm not going to say we guess. We really do try to work it out. And I think we've got a lot of tools which we can you know, home in on this, and that is quite a great help. It adds to anticipation, but it adds to participants in the market and to volatility to some extent, which is good for markets.
And just to give us an order of magnitude here, I know that the aggregate value of equities listed on the South African Exchange, in other words, the market cap is about sort of 5 or 6 trillion rand. Is that right?
I think so, but I can't quote the total in the bonds, except I think the total is even more.
Larger. The total value of those bonds is larger.
That's
because we know that, I mean, South Africa's debt to GDP ratio is currently sitting at around sort of 35%.
Very manageable.
And we've got a GDP of about sort of 2 trillion rand, so that means the bonds outstanding is quite a big number. And that's just government debt before you start adding all these other traded instruments.
The state-owned enterprises like Eskom and the water boards, and then the municipalities. And all the other.
Okay, just changing gears for a bit. What about the South African Reserve Bank? When did that come into existence, and what kind of role does that play in our financial markets?
They've always been there. We had to have a central bank after all. I think their role is to control the stability of the currency, and also to emphasize government policy. Do they want a growth policy? Do they want a slowing down policy? How do they do that? They set interest rates. So at the moment the government gives them a target of 3% to 6%. If they think it's getting too overheated, they put interest rates up. That means spending and financing are more difficult.
But they've also got quite a big research department, and they seem to have quite a big influence. They interact with Treasury quite a lot, looking at the nature and direction of South African economic policy. And there have been some quite key shifts because, you know, in recent years, South Africa has been quite fiscally responsible. We come across as one of the nations that survived the financial crisis of 2008 quite well because we didn't have enormous outstanding obligations, and we'd been quite conservative.
It's interesting that you say quite conservative, and I think this was brought in, a new era of conservative fiscal management was brought in from 1994. Very interesting development that when the rest of Africa, it has not gone that way. Hopefully the future will say the same story. There's another arm to the Reserve Bank's policy now,
yes,
or responsibility. That is to consider the state of the economy and unemployment. So that means
yes,
they can't just say, hey, look, inflation's too high, push up interest rates. They say, also got to say, is that going to put people out of work? So this is an add-on to them, which they take, I think, quite responsibly.
yes, yes. Okay, time for one last question,
Right.
if you can think of one.
I think the last question I would say is, what is your view of the way the Reserve Bank comes across to the public as a whole? Because that's important to govern expectations.
Yeah, it's a tricky one, isn't it? Because
Yes,
obviously
that's why I
they're
asked it.
speaking to lots of different audiences, and you know, there's the union movement, and
Yes.
people get frustrated at the way the economy functions. And in politics, you know, it's always questions of trade-offs, because
Yes,
you know, lower
indeed.
interest rates means lower returns for pensioners and people that are saving.
Yes.
And on the other hand, more expansive policies could have the negative effect that you're talking about.
Right.
Anyway, interesting that we've gotten to this point.
Right.
Ian, thanks very much. That's all we've got time for.
Thank you. Good to be